Welcome back, everyone, to Reuters Next. Many thanks for joining us. Apologies for the slight delays. We are having a few technical issues getting a link up with Madame Lagarde. We should, though, be with you shortly. In the meantime, let me just remind you that if you have any questions that you want to put to any of our live speakers, simply use the question box on the right-hand side of your screens. If you want to discuss the themes, the topics of the conference, do join the discussion groups. Click on the tab above this screen. Now, as I said, though, we are awaiting Christina Lagarde from the European Central Bank. We should be with you shortly. Do stand by.
Good morning here in Europe, and welcome to Christine Lagarde, the President of the European Central Bank. Thank you, President Lagarde, for joining us today. So President Lagarde took up her position at the ECB and is the first woman to hold the position just before the beginning of the COVID-19 pandemic last year. A year in which governments and central banks around the world have found themselves yet again having to stave off a major economic downturn, unemployment, inequality, and the physical and mental health of the world's populations. President Lagarde, after some euphoria last autumn that we were turning the corner on the pandemic, the end of last year brought a string of bad news, in particular about the ability of countries to get vaccinated by the end of the year. And indeed, after the last big ECB policy meeting about a month ago, the ECB cut its own baseline forecast for economic growth in the euro area for 2021 to 3.9% growth. And yet, even in the last month, the situation has worsened. There are new variants of the virus. There is some concern that current vaccines might not withstand future variations. And we are seeing new tight lockdowns, including in Germany. And of course, we've had the official exit of Britain from the European Union. And the World Bank said that it projects global growth to rise 4%, but it could actually rise as little as 1.6%. And indeed, just yesterday, even the Bank of America also lowered its Eurozone forecast. So, has the outlook for the euro area changed over the past month? And if so, what is your assessment now at the start of 2021 for this year?
Well, thank you so much. And it's very nice to be able to sort of step back a little bit, look at the latest development in 2020, and try to forecast and fast forward into 21 to anticipate what's likely to happen. I don't have exactly the same assessment of the end of 2020 as you do, because as you will remember, for months and months, we had uncertainty as the key buzzword when it came to economic forecasting and trying to assess the situation. And as part of the uncertain items, we had issues like Brexit. Will it be resolved? Will it be hard? Will it be soft? What kind of arrangements will we have? We had obviously the outcome of the US elections and more importantly of the Senate elections as well. And we had very little certainty about the approval of vaccination of the various vaccines that would lead to vaccination. So I would contend that some of the uncertainties that we had on the horizon that made us look at the future with a dark cloud over our heads, that some of it has been cleared. And, you know, whether you look at Brexit, it has been finally resolved at the end, at the very last hour, but at least we know under what terms, from a trade point of view, the situation will evolve in the course of the coming months. If we look at the US elections, clearly Joe Biden has been confirmed, and the Senate race that was very much a question mark as to whether the Senate would move one way or the other has also been resolved to the benefit of a Democratic majority, which will give a more stable political basis to Joe Biden when he's introduced and begins his term. And when we look at vaccines, now granted, it's been laborious, and the early stages have given a lot of ground to argue, challenge, critic, and so on and so forth. But it has started laboriously, but now it's, the first steps have been taken, the priority orders have been set, the centers are being built, and hopefully with more vaccines approved as we move into 2021, it's not going to be just the ARN messenger-based vaccines, but it will also be the more traditional vaccines that will enter into that race for vaccination and for herd immunity. So from that perspective, I think that we start on a more positive basis than what some would like to look at. And furthermore, which was clearly unexpected when we went into that disastrous pandemic, the Europeans have demonstrated that when the going gets tough, the tough Europeans can get together, hang together, and produce results. And, the next generation EU of 750 billion euros with joint borrowing and a clear focus on green and digital is a landmark, in my view, in European construction and this togetherness that is so needed in the face of adversity. Now, has uncertainty been entirely removed? Clearly not. And we have to deal with a different kind of uncertainty in many ways, which has a lot to do with how we roll out programs from many perspectives. In terms of health, how will we collectively, as Euro area and as Europe, how will we roll out the vaccinations? How efficient will we be? How fast can we move? How convinced will the Europeans be in certain countries? It's going to be critically important when we look at the economic developments and the economic forecast that we have. That's number one. I would say number two, which is also in our hands, how is the Next Generation EU and the other European programs that have been decided and put in place, how are they rolled out? So it's not any longer a health rollout and vaccination logistics. It's an economic rollout of programs which have to move fast because we clearly have a need for continued support, both from a fiscal point of view and from a monetary point of view, as we go into 2021. So the Next Generation EU will have to be rolled out efficiently, rapidly, and based on strategic plans, some of which have already been submitted. We know that roughly 11 European countries have submitted their plans. They are being reviewed and assessed, and there will be criticism, I'm sure, and there will be shortfalls, but the work is ongoing, and hopefully the borrowing will start rapidly and the payment to member states in order to support their recovery efforts and their stimulus will kickstart early on. Now, you've alluded to late December and early January, in other words, pretty much a month since our last projections. I think our last projections in December are still very clearly plausible. And the numbers that we had are minus 7.3 for 2020. That's bygone in a way. The forecast we have for 21 is a small 4%, 3.9 to be specific. Moving on then into 22 at 4.2%. And then, going back to more usual rates in the euro area of 2.1%. Well, those numbers are clearly based on assumptions which we believe are still correct today. In other words, we had anticipated when we forecasted those numbers that there would be continued lockdown measures, confinement measures taken in the Eurozone. And this is what we are seeing clearly. So the fact that whether you look at Germany, at Belgium, at Austria, at Spain, at the Netherlands, at France possibly, that are deciding one after the other extended lockdown measures, probably for some countries into February, for some possibly into March. Our forecast is predicated on lockdown measures until the end of the first quarter. So what would be a concern would be if after the end of March, those member states need to continue having lockdown measures. And if, for instance, vaccination programs were slowed down, were inefficient, which is not something that we can predict at the moment. There is clearly a ramp up of logistics. There is a clear concern. There is an impetus on vaccinations. So yes, we've had some negative announcements in terms of lockdown. Yes, vaccination start has been laborious. We had considered that in our forecast, and we have no reasons to believe that our forecast is wrong at this point in time. Now, clearly, it's all in our hands. The health and vaccination measures, the rollouts, and second, the stimulus that need to be continued and properly targeted to those measures that will be most conducive to growth.
Great. And so just to be absolutely clear, therefore, everything you have said being true, the 1.85 trillion euro stimulus program that has been extended to 2022, and you've even said it doesn't even all need to be used, in light of recent events, you still think it is the appropriate bridge across troubled waters, as you called it. You do not envision any further extension or amendment.
You know, you're referring to a very, very specific tool here, which is the Pandemic Emergency Purchase Program, which is very characteristic of the times that we're going through. It's the pandemic, it's emergency, and as a result, it is exceptional in many dimensions. And the critical dimensions, it's its flexibility. So it's flexible across assets. We have purchased many different assets from the past. It's flexible across time. When we launched it, we strongly front-loaded it. And it's different, it's flexible as well over jurisdictions. We have clearly considered that there was no limit to our involvement in order to make sure that monetary policy transmission was reestablished. But as you said, we have increased that pandemic emergency program twice over the last soon to be a year. And what we said most recently in December, without reneging on this three-dimensional flexibility, is that we were going to focus particularly on maintaining certainty in the area where we can have it and when we can influence it, which is financing conditions. We've managed to re-establish financing conditions that are favorable and conducive to investment and to restarting the real economy bounce back. So we are determined to do that. If the envelope that we have agreed upon is excessive and we don't need the entire envelope, well, so be it. And we will buy adequately in order to stick to our goal of those favorable financing conditions. But if more is needed, we will recalibrate. So that, if you will, added flexibility works both ways. If we don't need to spend the whole package over the extended period of time until March, we will not. The key and the compass that we have is favorable financing conditions without indeed losing sight of what is our mission critical, which is our mandate, which is price stability, and therefore making sure that in the medium term, we reach our goal, which is the close to but below 2%. But we're going to be particularly focused on the inflation impact that would be attributable and due in particular to the pandemic. That is our objective at the moment.
You mentioned, because you mentioned inflation, and the one uncertainty we didn't touch upon, of course, is the euro and the continued appreciation of the euro. Is it creating yet more downward risk in inflation, again, even compared to your December projection?
Well, it will not surprise you if I say that we look very carefully and we monitor very carefully exchange rates. However, any particular level is not a target. And we know well that the appreciation of the euro or the depreciation of the dollar, for instance, if we only focus on these two currencies, can exercise and do have an impact on price levels. So we are very attentive. We will continue being extremely attentive to the impact on prices that the exchange rates have.
If I can ask you, you're now at the helm of the ECB, but most recently you were at the helm of the IMF. So you have, let's say, a particularly privileged observatory over the world's balances and imbalances. Does it seem to you that during this pandemic, the developed world is being a bit stingy with the developing world? Vaccines, distribution of aid, funding. What are your specific, if so, what are your specific ideas for what wealthy nations should do, and which ones need to take the lead?
Yes, I'm not oblivious to the rest of the world because I'm now completely focused on Europe and the euro area in particular. And I would submit that if things go wrong, if vaccinations do not take place in any part of the world as they should, it is going to backfire on those who are trying to have a sort of an exclusively national or selfish approach to vaccinations. So it is in the self-interest of developed countries to make sure that low-income countries, developing countries, fragile states actually have access to vaccination where and how as it is needed. You know, there are initiatives to which Europe has actually been the largest contributor, which is called COVAX. And COVAX is an initiative that was taken, if I recall, by the World Health Organization, by the World Bank, and by the Bill and Melinda Gates Foundations. And my good friend Ngozi is an active advocate and leader of the COVAX initiative. COVAX is intended to actually collect and harness funding in order to help buy the vaccinations of the low-income countries and the poorest of the poor. So, you know, Europe, I think Europe has contributed something like 850 million euros to fund COVAX, and as such is the highest contributor. I know that there is a shortfall, and I know that Ngozi is fighting to get an additional $6 billion in order to make sure that there is enough financing. And that is something, I mean, I speak in a way without my ECB hat on, but as a true European and as a citizen of the world, I think that it is in everybody's best interest, including the Europeans' interest, to actually continue financing COVAX to make sure that everybody has access to vaccinations.
We'll try to come back afterwards more about the global scene, and in particularly China, because obviously they're a big player in the vaccines. But just to finish or to continue rather on Europe and the role of the ECB in monetary policy, banking regulation, and the EU economy. So you're running the ECB not only as an extremely delicate time economically, but also as the ECB is undergoing its own review, a major review. One that it hasn't done, I think, in 17 years.
Yeah.
So on the issue of banking regulation, the ECB has estimated that in the most severe scenario of the pandemic downturn, it could cause unpaid loans in the Eurozone to hit 1.4 trillion euros. Now, considering some of the bad news we discussed, and it's well taken that also a lot of uncertainty has been taken away, do you think that we'll have to extend support measures for banks specifically that you've put into place? And I'm thinking in particular about the dividend cap that is supposed to be removed in Q4. What are your thoughts on that?
I think we need to avoid making a mistake that would really expose us to very serious risks. And that would be to respond too promptly, to remove support measures too quickly, to stop some of the guarantee programs that have been put in place, to any kind of tightening at the moment would be very unwarranted. And we cannot rely on the expected pent-up demand, which might lead to some additional movement on the inflation front, for instance. We cannot rely on that to tighten as far as monetary policy is concerned. As far as supervision of the banks are concerned, good measures were put in place very early on in March in order to encourage banks to use their buffers, in order to remove some of the tight regulation environment that applied. And clearly, this is something that also has to continue being made available as banks are shouldering a lot of what I regard as important, which is our monetary policy transmission, number one, and the circulation of credit to the real economy. So we need to do what is sensible and reasonable in order to continue to encourage the banks to actually do that. And I don't want to dwell on this dividend tolerance that was issued back in December by the SSM, because clearly there was a more, I don't want to say lenient, but there was room for banks to actually pay out some reasonable, sensible dividends to their shareholders, because it's obviously something that is expected by them. But there was also concern about not, going over the top and exposing some of those potential reserves that would be used to be depleted.
So you mentioned inflation, obviously a few times. Primary target of the ECB, clearly. But I mean, does it even make sense anymore to have this target? It has been elusive for 7 years. If it is true that inflation is targeted to be 1.4% in 2023, it means the target will have been undershot by a decade. How much leeway is there to change this definition?
Well, two things on inflation, if I may. One is, it is clear that we have been for the last 2 decades, actually, I would say, living in this world of low inflation for all sorts of structural reasons that apply pretty much across the world. It's not Euro specific, it's not European specific, but there are factors at play which have to do with demographics, which have to do with productivity, which have to do with major changes taking place, moving from tangible to intangible goods, the issue of valuation and so on and so forth. So that's the backdrop, if you will, of what has been very Euro-specific, which is the sovereign debt that started in 2011, which was, a major shock that affected Euro area countries particularly. And I think that has played a significant impact on price levels, of which we still suffer the legacy, okay? So if you add to that the pandemic, which has caused, obviously, an impact on demand, which has increased savings for precautionary reasons and otherwise, which has not had, the probably higher expected impact on supply, and we haven't seen as much bottlenecks as we had expected. So if you bring all that together, it is clear that it has had a downward impact on price levels. But having said that, I think that we, as others have said before me, we shouldn't write off inflation. And clearly the movements that we're seeing in other countries, in the US, in China, including in Japan. I know Japan is always used as the Japanification of Europe. Well, there was some variations in inflation pre-pandemic that were going in the right direction. So back to your question, and with that as the background to explain the reasons why inflation and price levels have been so low, we still very much believe that the price stability objective that is embedded in the treaty, and which is the mandate of the ECB, can still be measured by an objective of inflation. This is a matter that we are debating as part of our strategy review. It's a matter that other central banks have been debating as well, the Fed in particular. And we clearly want to arrive at a degree of clarity and predictability, which in our view should be accepted by the Euro system, should be clearly communicated so that everybody understands what this inflation objective that we have is about, over what period of time we measure it and determine it. We are clearly looking at medium-term objective, not the immediate short-term objective, and how symmetric it needs to be, as many of us have already said in the past. Now, I cannot give you what exactly this inflation objective will be, because it is still being debated as part of our strategy review. What I can tell you is that we're looking at many aspects. We're looking at the right measurement of prices, and clearly on that front, I hope that we will be better able to account for housing costs. Our strategy review has been fascinating because it has been a lot of in-house work for the whole Eurosystem, because all national central banks, the 19 of them, have participated in the process. But we have also called upon academics to help and support us in the process. We have opened a window to the general public to actually participate in this strategy review. And one of the most often mentioned factor in this public consultation was housing costs. Why is it that the housing costs are not fully taken into account in the measurement of inflation, as is the case in other countries? So I'm not suggesting that it's going to change overnight, but I think that the accounting for housing costs in a more complete way, using data that is available, actually, because Eurostat does publish some really interesting information about housing costs, weighing that cost into the overall index of prices. All of that, I think, would go in the direction of better measuring prices and better helping Europeans anticipate and expect inflation, because remember, inflation expectations matter a great deal for the work that we do. So we're looking at measurements. We're looking at levels. We're looking at the period of time over which we determine it, and we are confident that we can get to a good objective that we will be using in order to assess whether we are delivering on the price stability objective that we have.
Is it possible? You mentioned the need for clarity and predictability, but the review is about so much more, right? It's a very wide-ranging review. Is it possible that you might push forward the inflation part of it? In other words, come out and either reaffirm the definition or tweak it slightly or whatever it is you have in mind ahead of time, even before the review, so that then you can move on with the sort of bigger picture, more conceptual parts of the review? Do it earlier, in other words.
Yeah, no, I take your point. It would be tempting and it would make news, and some people would be really thrilled about that. And observers know that, I'm particularly concerned in bringing the whole group together and keeping it together. And yes, there will be dissent, and yes, there will be moments when it's not unanimous and when it's not full consensus. But I think there was a very large group within the Governing Council who were keen to have all items reviewed, discussed, argued about, dissented about, and eventually, agreed as a total strategy review, and not have this sort of piecemeal, news-breaking, TikTok kind of communication about the strategy review. To give you an idea, we are halfway through. So we have done already a lot of work on, stock taking, inflation measurements, price stability objective. We're looking very carefully at financial instruments going forward. But there are lots of other chapters that we need to go into. The whole topic of financial stability, employment, climate change impact, communication. Those are topics that have not yet been touched. And it's a whole exercise which is broad-ranging, which is drawing on many participants, and which hopefully will come out with a result that will be not only comprehensive, but supported by as many as is possible.
So you have said, you have been very vocal about climate change. And indeed, you have said that the market is failing in pricing polluting assets, and that climatic events themselves can affect inflation, therefore justifying that the ESB can skew some asset purchases towards more green assets. But this is controversial among some economists, among some of your peers, precisely because there is a key focus that the ECB should have, and because there isn't such clear evidence of the link between climatic events and inflation. What is your response to this? This criticism, clearly.
Yeah. Well, first of all, I'm a lawyer by background, which some economists eventually resent occasionally, but that's okay. And I start from the legal basis, and I believe that we have the legal basis to justify that we actually look very carefully at the impact of climate change on various aspects of our mission, and I'll come to that in a second. That's number one. Number two, I observe that the three key institutions of Europe, starting with the Parliament, including the European Council and indeed the Commission, all three institutions are aligned in saying climate change is mission critical and needs to be addressed urgently. Number three, if you look at public opinion, and clearly a central bank should not be driven by public opinion, but what Europeans think and consider also matter. You have more than 70% of Europeans who, if asked, will say that protecting the environment, that includes biodiversity, and fighting against climate change are very important to them, and they assume that the authorities actually take those matters into account. So from that three perspective, legal, authorities, Europeans, it is clearly a priority. Now, what is the impact of climate change? I contend that, first of all, it has a direct or indirect impact on inflation, which is the gauge that we use to determine whether or not we deliver on our mandate. What do I mean by that? It has a direct impact in that if you look at the number of major weather hazards that have afflicted us in the last couple of years, it's unprecedented. I think we had in the last year only over 33 of such events, the damages of which have exceeded 1 billion euros. If that is not significant, I need a wake-up call, but I think that that wake-up call is the climate change. So it does have an impact. Number two, indirect effect. Assume that finally, authorities in the fiscal domain, which is the primary responsibilities, assume that they finally agree on a decent carbon pricing, not the average one that we have at the moment, which is way too low, and on carbon taxation. That would also have a direct impact on inflation and how we measure price stability. So that's just to give you a little sense of how climate change can have an impact on inflation for us. Now, it has multiple dimensions. If you include the uncertainty derived from climate change, the fact that many insurance policies, for instance, exclude consequences of climate change, and the degree of concern that people have about it, isn't that going to change their behavior? Aren't they going to save more? Isn't the real interest rate and natural interest rate going to be changed as a result of that? And are we going to not have a different policy space within which to implement and develop monetary policy? Of course it will. So those are the multiple areas only from an inflation standpoint and price stability. Now, if we look at financial stability, that's a whole
or support of the EU economy, indeed.
Yes, and financial stability goes to the point that you were making. In other words, are banks, for instance, recording properly the collaterals that they hold? Are they expecting their corporate clients to actually properly disclose the hazards and the risks associated with some of their activities for which they have secured a loan. These are critically important. It's not going to be easy because it will require data. It's going to require disclosure. It's going to require a combination of transition as well as proper pricing. But all of that needs to happen, and it needs to bring together all of us without this risk of, oh, this is mission creep. No, I'm very sorry, this is not. It's impacting inflation, it's impacting financial stability, it's impacting balance sheets of all, including central banks.
So hearing you speak, though, I have to ask, and you know, we can just deal with this quickly, but you know, should gender equality then and diversity in general be part of the ECB review? You have said, your fellow ECB members have said also that the impact, have talked about the impact of gender on economic growth. Do you feel you have a historic obligation to make a mark in this review with regards to gender equality then?
I think charity begins at home. And we are determined at the ECB to make sure that diversity actually transmits throughout the entire organization. And, you know, I'm known to have circulated on my Twitter account this picture of our governing council where there were two women hanging on the wall on paintings and me. Now, luckily, there are two of us now with Isabel Schnabel and myself, but we need to push that issue. And I'm not going to change the composition of the governing council all by myself. It's going to be for member states to actually do what is needed. And I would end on that. Member states have a direct responsibility to make sure that the legislative arsenal that is existing is actually implemented. I was delighted for myself to see that Germany is finally going to support quotas of gender representation on corporate boards. That is welcome.
Okay, we don't have much time left, but I do need to ask you, you know, there are so many potential bubbles, and one of those is Bitcoin, obviously. Are you worried about the Bitcoin bubble blowing up? And at what point does this need greater regulation?
First of all, I would observe that it is a speculative, it's a speculative asset by any account. I mean, when you look at the most recent developments upward and now the most recent downward trend, for those who had assumed that it might turn into a currency, terribly sorry, but this is an asset, and it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activity. I think that there are criminal investigations that have taken place that I'm sure will continue to take place that demonstrate it very clearly. What I think is far more interesting, and there has to be regulations, and this has to be applied and agreed upon.
Could I press you on this? And how strict should this regulation be, and who should regulate the different parts of it? So data flows, including the important issue of data flows.
Well, it's a matter that needs to be agreed at a global level, because, you know, if there is an escape, that escape will be used. So I think it needs to be if anything, it shows that global cooperation, multilateral action is absolutely needed, whether it's initiated by the G7, moved into the G20 and then enlarged, but it's something that needs to be addressed. And FATF is clearly an organization that has expanded in that respect. Clearly what we're seeing, which is in a completely different category, is the development of digital currencies, which is an area where we have begun doing a lot of work, where we have concluded actually yesterday a consultation of general public. And we had, believe it or not, we had the highest level of responses to that consultation about the digital euro. No less than 8,000 people have actually logged in and responded to the many questions that were on that questionnaire concerning a digital euro. So we are moving on. We are not charging on, because it's an area where we need to be very careful and where we need to have a system that is secure, that is safe, that responds to Europeans' demand, and where the risks of that I referred to earlier can be addressed as much as those of hacking and others.
How far are we, therefore, from a digital euro?
It's really hard to say because things in the fintech world are moving super fast. So we need to really not just be alert, but we need to be running safely. I would say that, you know, if we look at what China, which is probably the most advanced country in these developments, if we look at what they're doing and how they're piloting on a Chinese scale, of course, it's taken them about 5 years to get from sort of initial pilot and decision to start exploring and now. So I would, you know, it's not for tomorrow, and it's going to take a good chunk of time to make sure that we have something that is safe. But in my mind, number one, it will not eliminate banknotes. Banknotes are still to stay. But I think we will have a digital euro. Yeah.
Okay. No hint on timing. Further time.
No, because hard. I would say it's. I would hope that it's no more than 5, but we don't know how, you know, how acceleration where acceleration of the fintech world is going to take us. What I know is that we need to respond to the European demand, and we have a demand.
Okay, we have just a couple minutes left. And I should say that in some of these questions, I've also reflected some questions that have been coming from the audience. So we haven't ignored our virtual audience here. But I do want to ask you, as we are just at the end, a more personal question. What is the single most important thing that you have learned over the past year that you will take with you into the next phase of the pandemic?
Move fast and go big.
Move fast and go big. Okay. And when are you getting your vaccine?
I don't want to jump the queue, but equally, I really want to be vaccinated. I don't really care showing my arms to the world, but if that's what it takes to convince people that, yes, we must get vaccinated and yes, we must get to herd immunity, so be it. I'll show my vaccination process.
Well, considering your background as a synchronized swimmer, I bet you don't want to show you can't show your arms, unlike some of us. Who would your lockdown dinner guest be?
I would say, given my current function, somebody who's been vaccinated or tested positive in the last few hours.
And what are the books or movies that got you through the pandemic?
You know, because I spent quite a few weeks all by myself, without family and without husband, in Frankfurt in my apartment, and monetary policy did not always manage to lift my spirit on a very, very high basis. I started looking at a few series, and I will not mention the carrier of those series, but I've enjoyed some of them. But the one that has really lifted me and convinced me even more that climate change and the protection of the environment is an imperative is anything that David Attenborough has been releasing lately. And he has released a fantastic film co-produced with Netflix, I think, I have to say, which is both very worrying and extremely uplifting. It's got to be done.
And he just got his vaccine, so you can invite him to dinner.
Fantastic. Well, then he's my guest, for sure.
Great. President Lagarde, thank you very, very much for speaking with us on a whole range of issues. We really appreciate it. And good luck with the next few months and year.
Thank you so much. Pleasure being with you.
Thank you.
Hi, my name is Leila de Kretzer, and I'm honoured to moderate this session on fighting for press freedom around the world. Our three guests today are personal journalism heroes of mine, so I'm delighted to introduce Christiane Amanpour, CNN's chief international anchor, Maria Ressa, fresh from posting bail and the founder of Rappler, and Sunny Sway, the CEO of Frontier Myanmar. Welcome. I think we should get straight into it and tackle